Markets have been under pressure all week, and when fear takes over the headlines, most investors start running for the exits. But historically, the biggest opportunities in the market tend to appear during periods exactly like this. When prices fall across the board, some companies become dramatically undervalued compared to their long-term potential. The key is identifying businesses that not only look cheap, but also have real catalysts that could push them higher in the months ahead. So in this video, we're going to look at 5 stocks that deserve a place on your watch list right now. Some of them are trading at extremely small valuations relative to the industries they operate in, and a few have analyst projections suggesting significant upside if their strategies play out successfully. Of course, analyst price targets are never guarantees, but they can highlight where professional investors see potential. Before we dive in, if you enjoy finding under-the-radar opportunities before the crowd notices them, consider hitting the like button and subscribing. It really helps the channel grow and lets me know you want more research like this. And as always, I'm not a financial advisor. This video is simply analysis and discussion. Always do your own research before investing. All right, let's start with the first company. The first stock on the list is Intelligent Protection Management, ticker symbol IPM. This is one of the smallest companies we'll discuss today, but it operates in a space that continues to grow rapidly: cybersecurity and cloud infrastructure. IPM provides enterprise-level IT services, including secure cloud hosting, dedicated server hosting, data storage, managed cybersecurity services, and consulting solutions. Their technology infrastructure supports businesses that require high reliability and security, and the company has built relationships with several major technology names over the years, including NVIDIA, Dell, and Microsoft. The company has more than 2 decades of experience in technology infrastructure and has developed multiple patented technologies along the way. Their services are designed to support both smaller companies and large enterprise clients that need secure and scalable digital systems. From a market perspective, this is still a micro-cap company. The stock trades around the $2 range and has a market capitalization of roughly $25 million, which makes it extremely small compared to most publicly traded tech companies. There are also a few potential catalysts on the horizon. The company recently extended a licensing agreement with a major data center partner through 2032, strengthening its long-term infrastructure relationship. In addition, the company is expected to release its next earnings report soon, and its CEO is scheduled to participate in the Roth Investor Conference, where management teams often attract attention from institutional investors. Currently, coverage from Wall Street is limited, but at least one analyst has issued a buy rating with a price target around $6.50, which would represent significant upside if the company continues scaling its services. Now let's move to the second stock on the list, and this one has an interesting story. The next company is Dragonfly Energy, ticker symbol DFLI. Unlike the first stock, Dragonfly operates in the advanced battery technology sector, which has become increasingly important as electric vehicles, renewable energy storage, and industrial electrification continue expanding. Dragonfly Energy specializes in lithium battery manufacturing and energy storage systems. Through its Battlestar Batteries brand, the company produces battery packs used in applications ranging from RVs and marine systems to industrial energy storage. One of the technologies the company is focused on is a dry electrode manufacturing process, which could allow batteries to be produced more efficiently while improving performance and reducing manufacturing costs. The company also holds an extensive intellectual property portfolio with more than 90 patents worldwide, giving it a competitive advantage in several areas of battery development. What makes Dragonfly particularly interesting right now is that it was once valued far higher by investors. At one point, the stock traded above $20, but it's since fallen to the low single-digit range, leaving the company with a relatively small market capitalization around $30 to $40 million. Despite the drop in share price, Dragonfly continues launching new products and expanding its technology platform. Earlier this year, the company introduced its Battlestar solar integration system, and it recently received recognition for an innovative trucking power solution at a major sustainability awards event. Another important development investors are watching involves the company's collaboration with PECAR, a major manufacturer of commercial trucks. If Dragonfly's battery systems were eventually integrated into commercial vehicles, it could create a major growth opportunity for the company. Some analysts remain very optimistic about the long-term potential. In fact, certain projections suggest price targets far above the current share price, though of course those forecasts depend heavily on successful execution and market adoption. Next up is a company operating in a completely different sector, energy. Stock number 3 is Ring Energy, ticker symbol REI. Ring Energy is an independent oil and natural gas exploration company focused primarily on operations in the Permian Basin, one of the most productive oil regions in North America. The company acquires and develops oil and gas assets in West Texas, operating hundreds of wells and holding significant acreage across the basin. What attracted investor attention recently is the company's valuation metrics. Based on forward estimates, Ring Energy is trading at a very low price-to-earnings ratio, which can sometimes signal that a stock is undervalued relative to its earnings potential. The company's share price has also been gaining momentum this year, climbing significantly as energy markets remain strong. Analysts currently covering the company have issued price targets suggesting meaningful upside from current levels, particularly if oil prices continue trending upward. Of course, the energy sector can be volatile because it depends heavily on commodity prices, but companies operating efficiently in high-quality oil basins often benefit when global demand remains strong. Now let's move on to stock number 4, and this one operates in a niche resource market that most investors rarely think about. The fourth company is Pulsar Helium, ticker symbol PLSR. While helium may not receive as much attention as oil or lithium, it's actually one of the most important gases used in modern technology. Helium is critical for semiconductor manufacturing, aerospace systems, advanced medical imaging equipment, and scientific research. It's also used in rocket propulsion systems and quantum computing technology. Global helium supply has historically been limited, and recent production disruptions in certain regions have pushed prices significantly higher. At the same time, demand continues to grow as advanced technologies expand worldwide. Pulsar Helium is exploring helium resources in Minnesota in the United States and Greenland, positioning itself in regions that could become important future sources of supply. Industry projections suggest helium demand could double by 2035, which is why exploration companies in this sector have begun attracting increased investor interest. Several analysts currently cover Pulsar Helium and have issued price targets significantly higher than the company's current trading price. While early-stage resource companies always carry risks, the potential supply shortage in helium has created a compelling long-term narrative for the industry. Finally, let's talk about the fifth stock on the list, and this one comes from the biotech sector. Stock number 5 is GAIN Therapeutics, ticker symbol GANX. GAIN is a clinical-stage biotech company focused on developing treatments for neurodegenerative diseases and rare genetic disorders. It uses its proprietary Magellan discovery platform, which combines artificial intelligence, structural biology, and advanced computational modeling to design new therapeutic compounds. One of the most closely watched programs in its pipeline is GT02287, a drug candidate being developed as a potential disease-modifying treatment for Parkinson's disease. The compound may also have applications for other neurological disorders like Gaucher disease, dementia with Lewy bodies, and Alzheimer's disease. The Parkinson's treatment market alone represents a multi-billion-dollar opportunity, which explains why investors are watching this company closely. GAIN Therapeutics also has an upcoming catalyst that could attract attention. The company plans to present new clinical data related to its lead drug candidate at an upcoming scientific conference, which may provide additional insight into the therapy's potential effectiveness. The company currently maintains a relatively strong balance sheet with cash expected to fund operations into the future and carries no outstanding debt, which is somewhat unusual for early-stage biotech companies. Analysts covering the stock have issued price targets suggesting meaningful upside if clinical development continues progressing successfully. So stepping back, we now have 5 very different companies operating across 5 different industries: intelligent protection management, cloud infrastructure and cybersecurity, Dragonfly Energy, advanced battery technology, Ring Energy, oil and natural gas production, Pulsar Helium, helium exploration and supply, and GAIN Therapeutics, biotech and neurodegenerative disease treatment. Each one carries its own risks, but they also have potential catalysts that could drive future growth. The real question is which of these 5 companies has the most upside potential from today's prices. So I'm curious to hear your opinion. If you had to choose just one of these 5 stocks, IPM, DFLI, REI, PLSR, or GANX, which one would you put on your watch list right now? Let me know in the comments. And if you enjoy discovering smaller companies before they become widely known, don't forget to like the video and subscribe for more stock analysis. Thanks for watching, and I'll see you in the next video.